Hello, everybody, and welcome back, and welcome to 2024. I hope everybody had a happy new year. This is the state of the markets for the Dash Trader Newsroom for 2024. And let's just get started and jump right in. My name is Michael DeJoy. I'm Director of Educational Services here at Dash Trader and a licensed professional. And I'm joined by Jill Molandrino, back from her globetrotting and holidays festivities. Jill from the Nasdaq, how are you?
Good, doing well. Happy New Year to you, Mike.
Thank you so much. Glad to be back here in 2024. Now, a lot of the same topics that we've had in the past couple of years. Literally the Santa Claus rally. Let's just get started with a year in review. Santa arrived right on time. In fact, maybe a little bit early this year. I mean, what do you think of the sustainability of the Santa rally? And was it more than expected? Worse than expected? What are your thoughts overall on the action that we saw pretty much through the entire month of December?
Yeah, Mike, it was so interesting. If you would have asked this question where we would have ended up in the beginning of 2023, I don't think there is an analyst on the street, maybe with the exception of a handful, perhaps one or two, that predicted we would be up just about 26% on the S&P 500. And the majority of the indexes did very well for this year, considering we had a banking crisis in March, geopolitical tensions are as high as what's that?
Turmoil. I mean, we've had turmoil across the board.
Yeah.
It's crazy. Yeah.
Yeah, living in a higher interest rate environment. And the consumer cannot bet against the consumer. The market performed really well in the face of a number of worries. Any one of these situations isolated could have created volatility on its own.
Absolutely. I think certainly going into the beginning of this year, 2022 was a rough year. It was a down year. The markets completely rebounded from the lows of 2022. And that's going to bring us to our next, our next segue, which is 2023 was an amazing year for technology, amazing year for the markets. But the question is it sustainable? Right now we are at a point where 7 tech companies, mainly in technology, make up over 50% of the Nasdaq 100 index. Those companies all had tremendous growth in 2023. And can they maintain their earnings expectations going into 2024? Is it sustainable? And what happens if they get the Fed wrong?
I think it all comes down to, and this has been the general consensus on, people that have been on my show here, but it's all going to come down to the Fed. What they do in terms of interest rates is anyone's guess. I will say I don't think they'll do any more than 25 basis points at whatever meeting, whether it's in March, whether it's the second half of the year. I'd be really surprised if they do anything more than 25 basis points. As we've discussed countless times, they are not going to make the mistakes of reversing the course of action too quick. We've learned lessons from the late 70s and 80s, and I think they're going to let history serve as a guide. Should they take rates down too quickly and we get a spike in inflation, it really makes their strategy tough to execute on. So it seems as if they have achieved the soft landing, no landing, however you want to call it, but it certainly wasn't a hard landing, that's for sure. I think in addition to that consumer savings are dwindling down, student loans are back online, credit card balances are well over $1 trillion, utilization rates are at 24.2%. I believe that's according to Lending Tree. So again, the market climbed a wall of worry last year. Could it do it again this year? I think, we have an election year. I think in addition to the strength of the consumer in terms of credit, that our fiscal balance sheet is another concern. That, of course, is very interest rate sensitive. There's a number of things that are coming due there. So I think it's really a confluence of macro factors that are really going to influence what you see in terms of earnings. Although I will say, I think fundamentals are really going to matter this year. We saw the impacts of Mobileye revenue cuts on the entire semiconductor space, which is interesting because Mobileye isn't performing as well as relative, as poorly relative to the semiconductors that have exposure to the automobile space. But I feel like fundamentals really are going to matter, and investors are going to be more discerning because they are looking for other areas to outperform, with the exception of Mag 7. I think value and growth rotation is going to be another key theme. Of course, we're 3 trading days into the year, and that is not a trend make. But I think those are going to be the themes that you're going to continue to hear about: interest rates, Fed, strength of the consumer, credit, and fundamentals mattering for earnings.
Yeah, I think you hit on some key points here. Is that we've had tremendous earnings growth. There is a tremendous amount of I guess it's congestion in these 7 big tech names. And I think that going into earnings season, which we're starting now, which is the big earnings season, this is the start of the January earnings season, which is basically the annual results of all the companies from 2023. So we're going to see not only how the companies have done this past quarter, but how they did year over year compared to 2022, et cetera. So this earnings season is really going to count. And with that said, the early results for the holiday season are already showing that online shopping jumped nearly 6%. And you alluded to the strength in the consumer. The consumer was incredibly strong so far all through 2023. The consumer carried it. And how was the holiday shopping season overall? We're going to see that in the earnings numbers when they start to be released in the next couple of weeks. So what are your thoughts? Well, how was the holiday shopping season, and what do you think the earnings results are going to show going into 2024 about 2023's earnings?
Yeah, Mike, you brought up a really good point that I just want to touch on. That their fiscal year are coming up. Most companies, they do start their year now. So not only quarterly guidance, but full year guidance is going to be key. I also want to mention that next week you have the key biotech conference out in San Francisco. Then we also have the Consumer Electronics Show in Vegas, which we will be at. And there's always key announcements that come out of those two. So I think that could also lend to some, interesting trading activity in those related spaces. But I think the consumer spending was good. I think we have all come to like a valuation reset here where we're starting to live and understand, how new pricing mechanisms are working. I think it is a bit early to tell. My concern is that the utilization rate on credit cards is high, and that's when we start to see interest rates snowballing, and there's less capital to access should you need to, whether it's for discretionary purchases or emergency purchases, if utilization rates are high. I think a lot is going to depend on that. We have COVID savings are dried up, regular savings are drying up, and then if you are running out of available credit, that's another concern too. So I'm curious to see what retailers are going to say. I'm curious to see what the banks say in terms of consumer credit. I think that's going to be a really good read into this.
Yeah, I think that you're hitting upon an important point. We might have been operating, the consumer might have been operating all through 2023 on borrowed time, quite literally. Borrowed time and borrowed money. And they might start to tighten their belts this year. And that might affect especially the big sevens earning growth. So certainly we need to be aware of that. And of course, I think that the one thing that's a very prevailing trend is the election year factor. We're going into an election year, and that's a tremendous amount of uncertainty. The other thing is that the Fed has pretty much been running the show here. Completely, the entire market seems to be responding only to one thing, which is the Federal Reserve. And that's a big question and a big if for us as well going into 2024 is what will the Fed do? This rally was kicked off with 3 pauses of the Federal Reserve not raising interest rates. And I guess we're going to see at the next meeting whether or not they raise, lower, or just keep things the same. And that's going to really be very indicative on the way things, kind of play out during 2024. Any final thoughts before we call it quits and go to the markets?
I think that is it. I think there's going to be a lot on the table for sure this year, Mike. That's for sure.
It's definitely going to be an exciting year. Jill, thank you so much for joining us as always. And I'll see you in 2 weeks.
Sounds good. Take care.
Bye-bye, Jill. All right, let's jump to the markets. I'm going to bring up my dash trader. So pretty much since the year started, I mean, this is the S&P, this is the SPY. We are basically 1, 2, 3 days in, and we gapped down going into the new year, and pretty much we've sold off. I mean, we are just popping up my calendar here. We have 1, 2, 3, 4 days, 3 days into the new year in terms of trading days, and with the exception, I mean, all 3 days have been down. Obviously, we've had a tremendous run. This let's just pop on our weekly chart here. Hold on one second. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks up. And this is our first down week. So, I mean, usually the markets go in 3 to 5 week swings. So you'll have 3 swings in one direction, 2 swings in another, 5 swings in one direction. To go 9 weeks in a row, pretty much driven on speculation that the Federal Reserve is pausing interest rates and will be lowering interest rates soon. We definitely have a weekly sell signal. And I'm just going to I'm going to change my data config going back to 2020. So if I go here to my data, go to 2020. If you go to 2020, we have a top and a double top. Okay. And on the S&P, I mean, it's actually a slightly lower high. S&P 480 was, was basically the prior high going into 2021. And on the S&P, it is a lower high. But if you go to the QQQ, you can see that on the QQQ, it was a higher high. So the QQQ, the high on the QQQ was 405.30. And here we got to 411, really at the high, 411.75. So on the QQQ, the tech index has pretty much led the markets. The technology has led pretty much straight through 2023. This is a very, very shallow new high. And there is a theory called the microchasm macrochasm theory, meaning that as the year starts out in the beginning of the year, that the year will play out as the first couple of weeks of the year started out. And if you look and played that out in 2023, you can see that the market started up at the beginning of 2023, and pretty much it went up all year round for 2023. This year, we have the reverse of that, where the market is starting down, and potentially we could just go in the opposite direction. Now, that would make sense considering that the earnings growth of most of the big tech companies, I mean, you could see we've already had a significant move down on the Nasdaq. Let's take a look at the SPY. Not as significant on the SPY. On the DIA. On the DIA, certainly not as accentuated, but certainly up there as well. All-time highs on the Dow Jones, all-time highs on the Nasdaq, a double top on the SPY. Let's take a look at Apple, AAPL. So goes Apple, so goes the market. Apple is showing gap disease. Basically, you have a double top on Apple at this 200 number. And then certainly you see the markets are already peeling back pretty handily. So how things go for Apple is a great indicator for how things go for the market. Also, Microsoft showing signs of weakness. NVIDIA, super beneficiary of the tech and AI bubble. Not quite a bubble yet, but certainly we got a lot of volatility up here at the heights. And, it certainly could resume and continue. But there's a lot of indications that the 2024 might not be sustainable, as we are very heavily consolidated in technology. And we're seeing a lot of uncertainty. If you look at NVIDIA's price chart, NVIDIA has been pretty much up here in a range. I mean, it did make a tremendous move up at the end of, beginning in 2023, but at least for the last 5-6 months, NVIDIA has seen a lot of distribution. That kind of wide and whippy pattern is an indication of distribution. So certainly I would say that, there's lots of signs of volatility, and I would be very cautious considering that the year has so far started out in a mildly bearish perspective compared to the bullishness of 2023. Let's jump in and just take a look at oil, USO. So oil has certainly come down a tremendous amount. USO is a ETN that represents the oil contract. Let's take a look at USO. Yeah, USO is actually it's an ETF. See, USL is a longer term contract. Also pulled off the highs. Now that would certainly a drop in oil prices would be very, very good for inflation to go down. Question is, if oil prices start going up again, what's that going to do for inflation? It'll start to drive price inflation back higher. So let's take a look at OIL. Certainly OIL is much less. I mean, but you could also still see this kind of rounding formation potentially setting up for a move to the upside on OIL as well. So certainly we got a low, a higher low, a higher low. If we start to go above the moving averages, that would indicate a higher prices in oil coming soon. Next, we also have, you got oil. Let's take a look at GBTC. So Bitcoin has been doing tremendously well. Big run up in the price of Bitcoin and Ethereum, but we got a big reversal bar going into 2023, 2024, the end of 2023. We had some selling off on 2023. That could be tax selling, but we will see whether or not that this is possibly a reversal sign for some of the cryptocurrencies as well. Last but not least, usually gold is bullish this time of year, and gold certainly had a nice bullish run in the last couple of months, coming off that low of about 150 on the GLD ETF. But certainly gold, hanging out here near the highs, near all-time highs on gold, or at least recent highs on gold. And this is a time of year going into February and March that is usually a good time for gold to kind of peak out in terms of prices. You're going into the Chinese New Year, the Lunar New Year, in February and March, and that usually is a time when there's an increase in gold demand. But gold has certainly done well in the last couple of months as well. Stay up to date with all things DAS by signing up to our monthly newsletter and email. Simply fill out the form at the bottom of our website, www.dastrader.com. Subscribe to our YouTube channel at Dash Trader TV for DAS Newsroom reminders. Now, we're probably going to be going to a more frequent schedule in 2024. So certainly want to stay up to date with all things DAS. We're going to try to increase the updates on our social media as well, on LinkedIn, Twitter, and Facebook and Instagram, and provide lots of good educational content for you all going into 2024. So you definitely want to sign up for our newsletter and our various social media outlets. Look forward to seeing you, and trade well, everybody, and certainly be cautious. This might be a volatile year in the markets. Trade well.